Hey guys, welcome back to CapitalRock Conversations. I want to discuss the One Big Beautiful Bill and what it means for our wallets. It's going to affect everybody. That's what's gone on with the tax bill passing back on July 4th. It makes many of the 2017 tax cuts permanent, and it's going to create a significant amount of complexity with the new deductions and phase-out rules that were added to it. Let's just get straight forward to the changes that are going to impact most of individuals and families across the country. First off, the standard deduction is getting an increase for roughly about $750 for single filer and $1,500 for a married couple filing jointly, which is good news. It's higher than what we're expecting. And then the other good news with the new bill passing is that the marginal rates are staying permanent, and if they wouldn't have passed that, they would revert back to the old rates, which were higher back before 2017. And then you also notice the word of me saying permanent so far in this, which means Congress in the future will have to overturn this. Until there's a new president and he doesn't like what's going on, or Congress or the Senate wants to pass it, they will have to make a vote on this. So it makes this much harder to pass or change in the future. Some of the new above the line deductions that were added to it were auto loan interest. You can deduct up to $10,000 if your income's below $250,000. The second one's overtime and tips. Your income has below $300,000 for married filing jointly. And then there's the new senior deduction, which is $6,000 deduction if your income's below $150,000. These will be in effect until after 2028. And then finally, there's a new benefit that starts next year in 2026. You make a charitable that don't itemize, then this all provides a $1,000 deduction and $2,000 for married couples. This is just for cash donations applying for qualifying charities. These are all positive updates, but they fit in a larger, more complicated picture for us. Benefits of this bill will have certificate income requirements to qualify. You need to be aware of these tax torpedoes if you're going to go over those income or phase-out limits. Something that we need to be aware of. That brings me to the most important piece of this, is that we need to be proactive on it. Now more than ever, so get with your CPA or your financial advisor to work together to readjust your financial plan. So reach out if you have any questions, and stay tuned for the next video where we'll go over the tax torpedo to avoid going over any of these phased-out rules.